Welcome to Renegade Thinkers Unite, featuring the sharpest minds in marketing, inspirational case histories, and weekly insights you can apply to your business. Find out why top CMOs rank this podcast among their favorites. Now, here's your host, Chief Marketing Renegade, Drew Nizer.
Bank marketing. Two words that don't necessarily make you sit up and say, Shazam! I better listen to this episode. Well, my guests today have promised to challenge your misconceptions and help you see that bank marketing is not only at a fascinating crossroads, but also could provide guidance for marketers in other categories, whether you're B2B or B2C. Okay, that's a large promise, but I've known one of the guests, Paul Caden, since the mid-1980s when he was a client at Warner Lambert and I was a lowly account executive on Listerine. And our other guest, Sarah Welch, I had the pleasure of seeing present to 15, more like 18 of the top banking CMOs in the country. And like Paul, she's the real deal. Both Sarah and Paul work for a research-driven consulting firm called Navantis in their banking practice. So Paul and Sarah, welcome to Renegade Thinkers Unite.
Thanks so much. Great to be here.
So this is kind of fun. We've got two people in the studio. It's a little hot. So if you feel us perspiring, you know that here we are. But two people, so it'll be a little bit different for Renegade Thinkers Unite, but we should have some fun. And before we get too deep into banking land, let's get personal. Maybe you both could provide one sort of fun fact about yourself. Go ahead, Paul.
Yeah, sure. Thanks for having us, Drew. I have been involved with marketing for more than 40 years now and been involved with kind of things for all parts of your body. And one of the, I guess, highlights was I was the guy who eliminated the twin stick popsicle back in the day.
Wait, what?
Yes.
What? What does that mean?
Changed, for those who are old enough to remember, popsicles used to be two sticks that you would split apart and share with a friend. And I was the head of marketing at Sara Lee for Popsicle. As a disguise for a price increase, we eliminated the twin stick popsicle. And the next day there were satellite trucks all over the parking lot wanting to talk about it.
Oh, that's hilarious. And think of how many trees you ended up saving.
True.
You know, it's funny. I worked on Sara Lee at Chiat Day and, God, maybe 8 and 9 and so yes, 40 years. That's how long we've been in marketing. That's a lot, folks. Sarah, one fun fact.
Fun fact. This is not necessarily about marketing, but one of the things that I do for fun is woodworking. Both my dad and my stepdad were physicians, but they were also woodworkers sort of on the side and for fun. So I grew up with wood shops as kind of part of our sort of family thing. So I love to build furniture, make cabinets, and all sorts of fun things.
That's so cool. One of the good friends of Renegade is Trip Hunter, who is a marketer, but in his spare time is a woodworker as well. What's the coolest thing you've made?
Probably the coolest thing I made was young love. When I met my husband and we were sort of newly engaged, I for his 29th birthday, he turned 29 on the 29th. I made him an armoire. He was a music lover, and this was back in the day where you actually had physical CDs. And I made him an armoire for his thousands of CDs.
Wow.
So he still has the armoire. We rejiggered it a little because we don't have CDs anymore.
He goes, not only is she all the things I hope for, she also makes furniture. How much better could you ask? What else could you ask? Yeah, marry her right away. Okay. So, very cool. Where'd you grow up?
I grew up in White Plains in Westchester County in New York.
Uh-huh.
And I grew up in Southern Virginia, Iowa, and Florida.
Wow. Okay. So we've got, that's interesting. All right. And have you read a book lately that really made you rethink your drink?
So I have a couple of books on the burner, all of which are good, but probably the one that has made me rethink my drink the most, it's the 3-part series by Yuval, and I'm going to blank on his last name, but Homo sapiens, Homo Deus, and 21 lessons for the 21st century. And as marketers, AI is, and sort of anticipating others' needs before they have them is part and parcel of one of the challenges we have to figure out today. And he has a cast on sort of AI and what that means as a human that probably requires some additional thought.
Yeah, I was skiing with a brilliant friend of mine, and he was talking about that series, and sort of he was actually terrified because the picture he's painting of machines really taking all of our jobs, which I thought was interesting. I've had both of the first two books on my playlist on Audible for probably 2 years, and I just can't get myself to listen to them, which says you're much smarter than I am. Okay, we've moved that on. Now, Paul, what about you?
Not to make this a weird one, but I'm right in the middle of a book called The Holocaust, A New History. It's a history of the Holocaust and the origins of it, which has stopped my mind in its tracks on what people are capable of doing. And from a marketer's perspective, to see how Hitler was able to change opinions and get them to do things. So it's been a very important book for me. I'm 3/4 of the way through.
Wow. Well, I'm going to add to this. I'm in the middle of Michelle Obama's autobiography, and I wasn't really excited about reading it, but I've been listening to it, and it's like I can't put it down. It's a riveting story. I'm so impressed with her storytelling ability. Amazing. So, all right. Favorite show on Netflix?
House of Cards pre-election of Trump.
Right.
I stopped watching post-Trump.
It got a little too real, didn't it? Yeah, it got a little real.
I think it's covered on Netflix, but the best thing that's ever been done is The Wire.
Oh, yes. My son would agree with you, and I can't get my wife to watch it, so I've watched season 1, but that's as far as I've gotten. Some think it's the best written show ever. Yeah. Very cool. Okay. So you two have very different backgrounds, I understand, and I would love to sort of that help you inform your clients in terms of that. Maybe you could share a little bit about that because you're coming from different perspectives.
Yep. Why don't you go first,
so
Paul?
I think it's a really good point. I come from most of my experience on the client side, other than these last few years at Novantas. So I think the way I've contributed value to our own thinking and to clients is get inside the CMO's head. And what are the pain points? What are the burning issues? How are they going to react to solutions and make them feel practical for the realities of working in big, complex organizations? So I come as we have a CMO, ex-CMO in the house. Let's use him as our test case.
Right.
And my background, I started out at J. Walter Thompson and spent a number of years on the agency side, working across a variety of industries, and then spent the better part of the last decade in the world of startups, which is a world of digital marketing, a world of rapid innovation, of agile. And so I bring the perspective of both understanding sort of the big corporate need for distinctive value propositions, but then also having run and worked in the digital marketing world.
Okay, very good. So let's get to banking. Not exactly an industry famous for renegade thinking. Let's lay out the situation now. I know, Sarah, you did a shopper study that suggested physical factors like branches are decreasing, which is interesting. What's increasing then?
There are two things that are increasing. The first is marketing and brand. So the role of branches in sort of driving new customers into bank franchises is definitely decreasing. Marketing and brand is increasing rapidly. The other piece is digital, and the digital capabilities are increasingly important in driving new customers into banks.
Interesting. Okay, so I suspect it's sort of like newspapers in that the older you are, the more likely you are to continue to read them or to want to go to a branch and touch it. But if you're a younger person, you're digital all the time, and there's sort of some kind of a curve.
It's like a new convenience used to be a branch that was down the street, a branch near where I worked. Today, convenient for younger generations, I would say Gen X and down, is digital capabilities. Can I bank when I want, where I want, how I want?
Right. When you have a good banking app, well, I mean, every kid uses Venmo or PayPal, and it's amazing. It's not sharing money. It's a little social network. And it's like, they're so proud. Oh, I just sent you money for a drink, right? So that certainly set the standard. I think the banks have to be able to think that way. It's like, wow, here's this agile startup. Anyway. Okay. So Paul, what do banks need to do to succeed in this environment? If branches aren't important, how are they getting, new customers and so forth?
Yeah, it's really been interesting to look at this question analytically as opposed to just sort of our judgment. So we have a lot of data that says which banks are actually doing the best and which banks are doing average and which are doing less than average in terms of their actual results. And then we look at this research asking more than 10,000 customers a bunch of different questions about what led them to be aware, consider, and purchase. And so we can look at what kinds of characteristics are showing up for the banks that are doing the best. And it boils down, in our view, to a three-legged stool. And not unlike other categories, the first thing you need to do is just satisfy the table stakes items, things that people expect and won't really be happy unless you give it to them. And table stakes in banking is, as Sarah was saying, perceived convenience. You just need to be convenient enough to do the things you need to do. But that's not enough by itself. Then you sort of have permission to become distinctive in some area, just like in some other category, in every other category. What is it that will answer the question about why should I open an account at that bank? And that's distinctiveness. Those who are more distinct do better in our results. And then the third leg of the stool is you can have the right features for convenience and have an area identified for distinctiveness. But unless you spend sufficiently and raise your voice in the marketplace and break through, nobody's going to know. So it's this combination of I have the minimums, I'm distinctive in some place, and I'm spending enough and efficiently enough to break through and be heard.
I love it. It's a perfect place for us to take a break, and I want to dive into those and break them down when we get back. So stay with us. Did you know that Renegade Thinkers Unite was ranked number 2 of the top 10 podcasts for CMOs by Crackerjack Marketing? Wow, we're really honored. Now, we couldn't do that without amazing guests, and we've had some amazing CMOs on this show, and also terrific listeners like you all. If you like what we do here, please subscribe on your favorite podcast player. That way, you'll never miss an episode. Also, as a special thanks, I'd like to send you a free ebook on Renegade Thinkers. Now for that, just email drew@renegade.com. Now let's get back to the show. Okay, we're back, and my guests are Paul Caden and Sarah Welch of Novantis. And we were just talking about banks and the importance of obviously table stake stuff, but the distinctiveness part. So I'm working on book number 2. And I've done some research so far I'm not finished with the quantitative, but when I asked so far of the 70 CMOs that have responded, do they think their brand is distinctive? Less than half said yes. Now, and when they said that products or services are distinctive, then the next question was, do you think your marketing is different? Less than half said yes. I thought, wait a second, there's something so seriously wrong here, because that is what you do. It's like Michael Porter, uniqueness, right? That's pretty basic. And so that was curious to me. So as we focus on distinctiveness for a moment, let's talk about a specific a bank that really scores high on distinctiveness. I know I'm thinking of Umpqua, the one out west.
Mm-hmm. Used to be.
Used to be.
I mean, used to be distinctive. It's an interesting case study.
Okay, but so who is distinctive right now? And let's talk about sort of the bank that's killing it.
So Huntington is a great example of a bank that is really killing it on distinctiveness. And they are a bank that stands for being on the side of the customer. And one of the things that has made it so distinctive is they didn't just have a marketing slogan of being on your side, but they really live and breathe and embody their value proposition across products, pricing, the customer experience, as well as marketing messages. And that's essential. Customers, I think, are a little bit jaded when they hear a lovely marketing slogan. They're looking for the sort of, so what? Let's see it in action.
So what is the slogan, just out of curiosity? Do you remember?
I think they've changed it over the years.
Okay, well, we'll look it up and put it in the show notes. Okay, so this is, again, one of the fundamental themes of the new book is having a clear storyline that can be articulated in 6 words or less. But it doesn't matter because it is just words. And in banking, we know that could just be words. We could say, hey, we're customer centric. But if you're not, say, for example, open on the weekends, if that's an important thing, or if you don't have an easy to use app, or you don't pick up the phone when someone calls you, or there's lots of sort of manifestations of this. Is there anything that they did that was unique in the experience?
Yes. So, banks are famous for nickeling and diming in terms of the fees that they charge, particularly overdraft fees. And there are huge revenues that come from those fees. What Huntington did was put its money where its mouth was in terms of being on the same side of the customers. And they launched something called 24-hour grace, which gave customers 24 hours to right an overdraft wrong, if you will. And then, that grew into asterisk-free checking, which was sort of total transparency and on the side of the customer.
Is it Fred Reichheld who talked about bad revenue? Yeah, that's sort of bad revenue. You get it, but it's like charging fee for bags. It's just one of those things. And Southwest has been able to kill it with that. Okay. Interesting. Is there, and that's a very practical thing. So I love my bank, First Republic, and I use it both for business and personal. It took them a while to get their app together, but now it's awesome, both for corporate and consumer. But what I like is I know I can call my personal banker and it doesn't matter. If it's anything to do in the financial world, they'll figure out a way to help me. It's just incredible. And so I know, and that's their promise, is really going above and beyond, and they do. It's interesting, but they're very specific about the type of companies they work for. And that's got to be part of this too, is you can't try to be all things to all people, right?
That's right. And just to flatter you, they're focused on the affluent. And so you must fit their target very well.
Well, yeah. Well, they think I might. At some point, as a business owner, maybe I could be qualified.
So I think that's one strategy to distinctiveness, which, to your point, focus really in on a design target that you want to really break away from the pack in serving. First Republic is well known for serving the affluent in a way that the affluent would like to be served in general. USAA is another example where it's extreme intimacy around one particular target group. And the experience you get there, if you're in that target group, is unbeatable, or so far unbeatable. So intimacy on the segment. A third example that we frequently use is TD Bank, and it's changed a little bit, but they staked out convenience and call themselves America's most convenient bank, even when you answer the phone. And everything they decided in terms of branch hours and bringing your coins there at the time that they did it was all proof points for convenience.
Then that's a great example, because that was Commerce Bank. That really was unique, and they were first bank to be open 7 days a week in New York City, and they did have the coin machines. And when TD Bank bought them, it was interesting to me, they adopted the slogan, but started to remove some of the things.
Including the coin.
I know, it kills me that they did that. It was such a convenient thing. I opened up, literally opened up accounts for our kids there. It was, one, it was convenient, and two, it had the coin machine. The kids liked the coin machine. It gave us an excuse to go to the bank and talk about money, which is hard with kids. So, yeah, thank you, folks at TD. But we'll
blame the lawyers for that one. I think it was there was a class action suit because the coin machines were just ever so slightly off in their calibration.
Oh, yeah, right.
And somebody brought a lawsuit, so it ruined it for all of us.
Yes, I'll add it to the list of the legal profession. Okay, that's funny. I haven't ever had a lawyer on the show. Maybe I hear Michael Cohen might be available.
He might be. But he's going to bring a bag of cash with him.
Oh, that'd be nice. Okay. All right. So, we have, USAA is a great example. They always come up as a top, the number one net promoter score bank. I've seen a couple presentations on them. One of the interesting things is they hire a lot of ex-military. And so like you sort of, they know the customer. They are their own customer, which is really smart. But again, very few marketers have that kind of focus. And I bet very few banks have that kind of focus too. It's like, we're all things to all people.
Yeah, when you actually look at the research and you plot the banks in the US kind of on these dimensions of perceived convenience and distinctiveness, there is a great mass in the middle of undifferentiated banks. There's, from a consumer's perspective, a lot of sameness. And I think, yes, the concept of a very specific design target and segment focus is appealing and yet terrifying. I need to be all things to all people. There's nobody I can afford to turn away for my business to succeed. So that's definitely one challenge.
Right. So they're just looking at it as it's a numbers game. Let's get as many customers as we can. We don't really care whether or not we're going to satisfy that customer or not. So I know you folks have done a lot of research on the way banks can distinguish themselves. And actually, I think you laid out a bunch of those ways. I'm curious. It feels like those ways are probably relevant to other businesses too. Let's talk about, and maybe there's other examples that you can give of some of the ways that banks could in fact distinguish themselves beyond what we've already talked about.
Well, one kind of paradigm shift that we think has probably the most potential is the banks have kept themselves to think about things in terms of features and functionality. And if you can out-feature the next bank, maybe you could win in banks' minds. We've seen that there's a whole nother dimension, we'll call it emotion. Money is a very emotional topic for people, and it creates anxiety on the one hand, and it can create great satisfaction on the other hand. And so banks are waking up to the knowledge that if you can appeal to the emotional side, you can grab people. But then that has to be lived out in the actual experience. So I think two things here. One is amplify your emotional connection, but make it real in what they actually experience with you when they touch you.
And I want to, that's such a great point. I want to dive into that deeply when we get back.
You've been listening to another great interview on Renegade Thinkers Unite with Drew Neiser. But the value doesn't end there. As a listener, you can download a free ebook from Drew, Renegade Thinkers, interviews with 11 trailblazing CMOs any business can learn from. Top marketing thought leaders and proven executives from Time Warner, American Express, and Chico's, and others. Get your free copy at renegadethinkersunite.com/ebook. For listeners only at renegadethinkersunite.com/ebook.
So we're talking about emotion, and that's pretty much a fundamental part of what we marketers have been thinking about. Certainly on the agency side has been selling emotion for as long as we've been in the business. I remember in the 60s/70s, Union California Bank had this wonderful ad with a young lady who became a famous actress, and the whole ad was about her talking to Mr. Popopoulos. And it was just a very funny, humorous ad. And I remember it worked like gangbusters because she was so likable. And at the time, you could just be likable on the outside. And that was enough because that created awareness and people saw the branch and they said, oh, I think I'll stop in. Maybe they're friendly. So if we said we're going to be the most likable bank in the world or the United States or the state of Georgia, you'd have to do something, right? You'd have to train the employees. You'd have to regroup. I talked a lot about this aspect with David Edelman of Aetna when they rebranded and talked about how they took 6 months retraining everyone. Has a bank actually done that where, let's say, they've found their emotional pitch and then they've made it real?
They are trying that, but here's the rub, that once you become a customer of a bank these days, the amount of actual interaction that you have with humans for most customers is certainly not as great as it used to be, and in some cases it's hardly at all. So the question becomes, how can you become likable or emotionally connected in a digital relationship, and the experiences that you get, yes, in doing your transactions, but how can that be surrounded with other value that makes you say, this is really a great bank to do business with and I'm getting a lot out of it, but not be as dependent on people to do that.
Okay, that's hard. It's really, and I think about it, and this is a lot of brands have done things to put technology in the way of their connection. So you have chatbots. It's not a real person. You have just sort of digital reports. And so the good news is it's incredibly efficient. The bad news is it's so transactional that there's no real relationship involved. So what that must do is put a lot of pressure on when you do have actually an issue and you want to talk to somebody. So there's one, you have to make the most of that. But I would think that marketers would say, at least for their higher value customers, think about, all right, how do we have a physical interaction, or at least something that goes beyond me depositing a check using the app? And are any banks actually doing that? I know, like American Express has been doing that kind of thing for years, providing extra value for their cardholders so that membership has its privileges. It really does, right? Are banks doing any of that?
So I do think that some banks are trying to do that. First Republic, which you gave, is a great example of one that is building a real value proposition around just that. But I think this is where the conversation we were having around having a clear design target really comes back in terms of importance. If you don't have a clear design target that you are driving a particular experience for, you end up with an unclear, well, what exactly should I be optimizing for in this experience? I want it to just not be bad. So it comes back to having the power of conviction around the target that you're really going to focus on and deliver for, and understanding their jobs to be done.
Exactly. So you have a very specific core target that you know intimately, as we talked about with USAA. You have a very clear, big, emotionally based promise. Then we deliver on it any way we can, and then we try to maximize the opportunities when we actually have a human interaction. Sounds like a really good formula. Sounds pretty simple. But again, it's hard.
It's particularly hard in banks, and I think both Sarah and I can make comparisons to other organizations, because to do this well, all of the ways in which a customer touches and experiences the organization needs to be aligned and get the point about how the bank is supposed to come across. And banks still suffer from siloed organizations by product, channels that aren't necessarily operating off of the same information. I think we see that they all are getting this now, but it's still a journey to make the whole complex organization come off in a way that's serving the brand, understands the target customer, and does it better than, frankly, some of the monoline financial services companies that may just do credit card or may just do mortgage or may, just do insurance. Here you have all those parts in a bank trying to come across to Drew and feel like they get him and that they do well. And First Republic does that because they focused on one segment.
Interesting. So I had never actually financed a car loan before. And because I've sort of leased cars for the last, and then I finally decided to buy one, and an accountant said, hey, just finance it. So I started online, but we couldn't finish the transaction. hours in the branch getting this done. Hours. And constantly replicating forms that you would have thought could have all been digitized already.
There you go.
And you say, wait, this is one of the largest banks in the world. It was Chase. And by the way, the person who helped me who had never done this before was unbelievably dedicated and called me back up and said, by the way, this paperwork is there and so forth. But I thought, this is not a complicated transaction. I mean, there were 3 parties involved. There's, and so, but it took better part of a full 8 hours of my time, maybe more, for a car loan.
And many are better than that now. So next time you do it, talk to us. But yeah, I know the ability to, backing up for a second, the water level of expectation that consumers have is being set way beyond just the financial services category. So your experience in doing your life digitally is very good in many other realms. So people are saying, why does it have to be this way at a bank? And so, in fairness to the banks and the people who are smart and they're working on this, there's still a long way to go.
Right. And I know there are regulatory things that require them to have paper copies of things and so forth. So, all right. We talked about table stakes and we talked about differentiation. What we haven't talked about is the third point that you mentioned, which was sort of marketing and media and spending and so forth. So let's talk about that and what do banks, and this really applies to marketing, and I'm going to go on a side tangent. Let's face it, disruptive media approaches are very hard. We talked about Netflix in the beginning. I do that on purpose because very few of us still actually watch live television other than sports. So that's changed the game. And banks want to, for the most part, reach a broad target. So what are some banks doing to help their media spend cut through?
So, without a doubt, vast portions of budgets are shifting from offline media to digital media. But if you think about it, and this is true for retailers as well as banks, the dynamics that you have are very different market to market. The number of branches that you have, which branches act as a billboard, which drive awareness and consideration in a marketplace. So the number of branches you have, the number of ATMs you have, coupled with how much you're investing in that market have a very big impact on the overall efficiency and effectiveness of your media investment. So one thing banks are getting smarter and smarter about is optimizing their allocation of dollars on a market and micro market basis, and then fine tuning mix, so that they are delivering an appropriate impression load at the most efficient cost, given their kind of physical network.
Right. Okay. And I want to circle back to that, for a moment. But what's interesting to me is that I also saw data yesterday that said that 30% of web users in the U.S. have ad blockers. So digital is problematic too. Plus, response rates on digital are pretty low, and it's hard to build emotional connections, which we said was a key thing. So it seems like there you see Co-America Stadium and, MetLife Stadium, and you see these big banks like BBVA Compass in Houston, doing more outdoor. And I pause, and I'm going to actually sort of, what's an advantage that banks have with the branches is that it's outdoor. Right. So if they shut branches down, they're losing a lot of exposure.
That's right.
It's very quantifiable, the impact of that on your new account openings.
Interesting. So even if they don't go into the branch, they see the branch, it's outdoor. It reminds them every day. I walk by the HSBC on this corner, the TD Bank on that corner. That's outdoor that works, keeps them top of mind. That's interesting. And so it's no different than a retailer having really good shelf space, which is sort of their outdoor, which they lose when they go digital, but different story. So interesting. Okay. Digital isn't the way to build emotion. TV's reach is declining. They all either have to spend their money on sports, which a lot do, or outdoor, I guess. I mean, where do they spend their money?
This is why we have a lot of empathy for the difficulties that CMOs in banking have because of everything that you said. In fact, one of the biggest bones of contention for them is sponsorships and stadium naming and other venue naming, which they do spend a lot of money on. They have real difficulty putting their finger on what that's doing for them. And you have another overriding problem for the marketer, which is in the banking category. People really would rather not switch their bank. It's a pain in the neck. So it's very hard to dislodge somebody to say, I'm happy, but I'm going to move they're not going to do it most of the time. So people are in the market for various reasons, life events, bad service. So you're kind of fishing for those people who are in the market at the time that they receive your message, and you build up a brand image over time. So this problem of trying to find the right person at the moment in life where they may be in the market and then convincing them to come over to you is super hard in this category. And emotion, we see a lot of video in digital that's being used to try to accomplish this. And I know we want to get to talk about attribution, but how to attribute investing in some of your video assets in digital versus TV is still a conundrum.
Okay. We promised to talk a little bit about B2B. A lot of this has been about B2C. Are there a couple of things that when you're talking to banks about their B2B marketing that are things that they're missing, or some insights that you could share about B2B versus B2C in banking?
Yep. So this concept of a design target is as applicable to the world of B2B as it is B2C. We just did some research on the small business segment that banks serve, which is clearly a B2B. And one of the things that sort of popped out of that research was in the past 10 years, companies that are new and have formed in the past 10 years look very different than companies that are older than 10 years. So companies that are younger than 10 years are much more likely to be women owned, are much more likely to be minority owned, are much more digitally oriented. And so picking is that your design target? Excuse me. And then developing your offering and communications for that particular target. So if the younger than 10 years is your design target, from a marketing perspective, you would be using digitally driven content marketing to connect with and pull in new customers and new small businesses versus companies that are older than 10 years, much more likely to respond to the direct outreach from a salesperson, the more sort of high touch traditional banker.
So is there, I describe this situation as the give to get economy. If you want to get someone's attention, you have to give them something of value. Are there any banks that are, when they're targeting B2B, that are actually doing a really good job with their content or with the way they're, say, for example, helping small businesses?
We're pausing because the answer may be no. But
hey, well, there's an agency here that specializes.
Yeah, there you go.
If you need some help in that area, no.
But I think that one part that is part of the problem is there's some traditional ways to segment in small business by size of business or by industry or by length of time, which is fine. But we've found, just like in consumer, there are attitudinal segments amongst business owners that are at least as important to appeal to. And so in the smallest part of small business, marketing kind of works like consumer, and some of the same techniques work. But business banking, as you move up, it moves more to a human account officer kind of relationship, and most of the selling is person-to-person selling. So it's a little bit more about lead generation and getting the human in front of the prospect. So it's a matrix of these segmentation variables, and then the marketing techniques and sales techniques kind of fit into that matrix.
I'm going to refer you folks, if you missed the episode with Ian Howells from Sage Intact, he talked about how SEC codes were useless from a micro-vertical targeting, and they're using actually AI to help them identify sort of segments within segments that match what they're really good at. And that's part of this here is if you start to look at, I mean, we've done a lot of work with small companies targeting small businesses. Half of small businesses don't even want to grow. Well, if I were a bank, I wouldn't want that one. So, okay, that's half. Now we want to find the one. And then within the rest of those, the difference between a tech startup, for example, and, a CPG startup, I mean, really, their needs are different and so forth. So,
You do bring up AI, which is a tectonic shift to everything that we've talked about, because at a certain level, it doesn't care how good your segmentation is or all the things you may judge to be best. It's going to say, let me just try everything over time, and I'll tell you what's working and what's not working. To some degree, segmentation is dead in that kind of scenario, and it's all about deep learning and iteration to the tactics that work are going to work, and let it flow.
Interesting. Okay. So I was with a group of CMOs last night, and we were talking about attribution models. And one of the things that struck me when I saw you folks present is that you are working with a company that what looked like a remarkable attribution model where, and you correct me if I'm wrong, but it looked like you could say if you put a little more money in brand spend, you could actually see the brand lift on a brand health score if you put a little more money in sort of rate driven. So if you could see the change there, where do you think, talk a little bit about as we sort of wrap up the show, what's state of the art for attribution modeling right now?
Yep. So the world of attribution has shifted from marketing mix models, which are still useful, but are backwards looking and sort of aggregate, to a world of really forward-looking, ongoing optimization, which is person-centric attribution. So the ability to, on an atomic level, identify this particular consumer has been exposed in these channels to these messages and these specific creative units, and basically model out what creative is resonating with which customer segment, and then in which channels, and really what sequence in which channels should you be delivering your media. That is where the world is quickly heading with this concept of person-centric attribution. And there are really two providers that are playing in this space well today. One is Visual IQ and the other is Marketing Evolution.
Okay, we'll link to both of those companies in the show notes. As you were talking, and one of my concerns with this is that you do so much of this stuff that you lose the big message in favor of these little micro messages, and that you might even lose the emotion because you don't have this big brand connection. And so, I mean, we know that frequency matters. And that repetition, that you over and over and over again, eventually you come to either love a brand or not. And those are emotional cues mainly that do that. So my one concern is, can you sort of bake into that attribution model some sort of consistency and say, you know what, we might optimize for this change of message, but it's off. So we'll just let that go because it's off story.
We shouldn't see some of these technologies as having to be at odds to the concept of brand and differentiation that we started with. Because if you optimize your message around the wrong strategy or something that's not differentiated, it's not going to work. So how much money to put into upper funnel and how to maybe fine tune some of the creative elements in that upper funnel is AI-able and attribution and analyzable, but not to throw everything to the wind and lose your essence. Right.
And I would say that's probably one of the things that the CMOs that we work with around this topic get most excited about is the ability to finally close the loop between instinctively what you know about brand and the importance of brand and spending and investing in brand, and all the rest of the sort of lower funnel stuff that has had kind of good attribution modeling for a while. So it is an exciting time, I think, for marketers and CMOs who do believe in brand, because we are approaching a point where you can say, hey, look, shifting the mix to brand messaging and emphasis on the upper funnel spend makes your lower funnel 3x more efficient and effective.
And it is, from a practical and somewhat political standpoint, for the bank CMO in their organization, it gives them credibility to explain how much money the budget should be and what you're getting out of it in much more concrete terms than they've ever been able to do.
So does that mean that bank CMOs will be able to stay in their jobs a little longer than average because they'll have better attribution and therefore better conversations with their boards?
You would hope so.
Okay. Well, I want to also call attention to AIable. That's the first time that's been used in the show, first time I've heard it.
I just made it.
Yes, exactly. And by the way, years ago when we were doing experiential marketing, we always talked about the importance of it being PRable. So now we'll have to have PRable and AIable as part of your marketing mix. Okay. So again, calling back to a podcast interview I did with Ian Howes, when they do their interviews, they've actually trained their interviews. They always ask the question, is there some question I should have asked you that I didn't, that will help inform, that you've been thinking about? Oh, I wish he would ask me this.
Well, again, putting myself in the heads of our CMO clients, I worry, and I hear from them that they're sheltered in their own category, trying to figure this out as bankers by themselves, when so many of the things that we've talked about today are really shared across industries and across verticals. And I don't know. I wish for how to cross-fertilize best practices across industries as we try to do in our little way, but this is in many ways not unique to just the banking industry.
Oh yeah. No, all the things that we've discussed about it, and I can sort of summarize: big brand, differentiated, unique story. Boom, number one, that's a starting place for any business. Two, making it real, right? Operationalizing your idea. Three, sort of spending behind it, because the word has to get out. Now, if you're lucky enough to have branches that have outdoor and you can sort of deliver on that experience, that's great. But people under 40 aren't going to go to the branches. So then you have to keep growing it from there. Sarah, any last words or things that I should have asked you that you were so ready to answer?
I think the other big area of challenge, and I would say this is also true well beyond banking, is the role that marketing has to play within organizations of driving alignment around the customer. And it's complex. In a bank, you're selling multiple products to people with different risk profiles and different pricing. And today, banks are structured in a way that you're around a particular product. And so marketing tends to be optimized at the product level as opposed to around a customer. So you might be getting 50, 100 different messages from your bank that are not coordinated and leading to sort of a muddled picture in your mind of what that bank exists to do for you. And I would say that's probably true for retailers and certainly many other CPG categories. So marketers do have an important role to play and can use analytics and sort of customer level data to drive the organization to alignment around the customer as opposed to maximizing the sale of widgets.
It's why we've renamed the CMO in banking to the Chief Alignment Officer.
Interesting. And I was talking at length with the CMO recently about this whole issue of, cross-selling and upselling. And it's such a, it's everybody wants to say you want fries with that. But the difference is I'm already ordering food. I'm right there. Fine. Upsell me on that. But, and I remember a conversation with a CMO a few years ago who actually bought into Forrester's belief of, customer centricity matters and was able to reduce the number of contact points from something like 21 to 7, saw customer satisfaction go way up. And by the way, it wasn't hard because you just do a little segmentation and you don't have to. The problem to me stems with you have individuals in the organizations who bonuses and performance are not based on customer satisfaction, but based on selling that one individual product. So they don't care.
Right.
And so you have to have organizational alignment. This is again where the big brand story matters because we say, hey, we really care about our customers. Well, if you really care about your customers, you're not going to hit me 5 times a week trying to sell me your next widget, but you might help me get information or something or an experience that would be of value. Okay, a lot of preaching going on here, but hopefully you've stayed with us. So, Paul, Sarah, thank you so much for being on the show.
Thanks for having us.
So, all right. Well, to all the listeners, I've already summarized, I think, 3 different times, but I'm so grateful that you're continuing to stay with us. And until next week, keep those renegade thinking caps on and strong.
This has been Renegade Thinkers Unite, but it doesn't end there. Just go to renegadethinkersunite.com for more and subscribe to the show. That way, you'll never miss an episode. We'll talk with you next time on Renegade Thinkers Unite.